Alright, good morning. I want to quickly show you how simple Forex trading can be, because so many people overcomplicate it. They think that you've got to have tons and tons of indicators. They think that the more you know about everything that's going on in the market, the better trader you are. And it's simply not true. They think that professional traders are keeping something from them, or they know something that they're not quite sharing. And it's not true. The reason that professional traders are profitable, consistently profitable, is only partially down to the technical skills. Most of it is down to having a plan, having discipline to remain consistent, and not giving away the profits back to the market by breaking those consistent rules. That is the number one reason that people either just end up breaking even or losing money. And the reason that professional traders are able to be consistently profitable is just because they've got the discipline to remain consistent and keep the profits. They don't give them back. I know many traders that are just 50% traders. They're right 5 times out of 10, and the reason that they're profitable is because they've got an edge, and the edge is that they stick with a plan where they know that they win more when they're right than they lose when they're wrong, and they're right slightly more than they're wrong, and that is it. Now, what I'm going to share with you is a little trade that I just took on the Aussie CAD. Now, I have no idea if this is going to win or lose, but I'll tell you one thing, it's a good trade because it met my rules. And this has been a case of me just sitting here waiting for it to play out, and we're now at a level where I was able to enter. So I'm going to share this with you. So, as you can see, for starters, I've got no indicators on here. I've got a couple of moving averages. That was from some testing I was doing, but there's no indicators on here, right? There's no fancy patterns and swirls and lines. It's just naked price action. And one thing that many traders try and do is try and profit using these double tops and double bottoms. They try and buy the bottom, sell the top, and they end up taking every retest that they find. The problem is with that is there's going to be high probability double tops and double bottoms, and low probability double tops and double bottoms. What I do is I just wait patiently for those high probability ones. And I'm going to show you a little trade that I took here using a double top entry at structure. So let's just take a look at why I was able to take this trade. So first of all, you can see that we're pushing up here, and we are pushing into this previous level of support, become resistance, and this also happens to be one of the psychological high major structure levels at 9,700. So we've got that 97 even handle number. Those of you who don't know that all of the market moves are created by psychological patterns, and we find that the same patterns are respected in multiple markets. So much of it is to do with psychology, and you're going to see that we're at that 9,700 even handle number. Now, you can see that we started to decelerate here with this big bullish momentum during the Aussie news yesterday, and as we push up, we get this nice high test candle wick. Now, this candle wick right here, what this indicates is the market opened, the bulls pushed all the way up. Let's just zoom in here a bit. The bulls pushed all the way up, okay, and then there was a rejection. They got slapped in the face, and we closed much lower, in the lower third of the candle. What that represents is some bear pressure at that level. So as we've approached previous structure resistance and support, right, we run out of momentum. We slow down, we see that deceleration, we see that slap in the face, and then we start to form this ascending channel at this level. Now, if you notice down here, I've got something called the relative strength index, and what that is it's a measurement of when the market is in overbought or oversold conditions. It's the speed of the transactions taking place. So if you imagine when Justin Bieber goes and launches his concert tickets, right? In the first minute or 2 minutes, there's a fast transaction taking place. There's lots and lots of tickets being sold very, very fast. And then as the worst seats become available, the ticket sales start to slow down, and they become overbought. So that's exactly what this is. It's an overbought condition, and conventionally, the RSI is considered overbought at 70. Now, I have mine set at 80 because I want it as an extreme filter. Again, I'm being patient. I'm waiting for rules to be met. So I have it set at 80, and you can see we went right up to 96 yesterday, overbought at that level. So what that indicates as well is that we're likely to see some a relief here, a pullback. The market's running out of steam, so we might see a rollover. So think about what we've got lining up so far. We've hit major structure, we've hit an even handle number, right? We've got RSI gone massively overbought. And the next thing I can do is bring on some ratio tools. Lots of you are familiar with ratio tools. If you want extra confirmation, if we just go from this swing high to swing low here, you're going to see we've got that 618 right at that level as well. Now, 618 ratio is the golden mean. If anyone remembers doing that at school, the 618 ratio is everywhere in nature. It's respected everywhere. Plants, seashells, petals, you know, your arm, the length of your arm, the length of your nose, everything, right? So it's also respected in the markets. So although I don't trade straight off of fibs because I think that's crazy, there's confluence here, right? Because it's all lining up, the stars are aligning. So what I'm looking for is quality trades. I'm looking for high quality trading opportunities. So with all this in mind, what I'm looking for, I've already identified that this is a really, really nice level. So what I need is an entry technique. Now, what I'm going to do is I'm dropping down the time frame. So I'm going to go down to the 60 and look for a double top at this level. So let's go down to the 60, and you can see that we had this really, really nice double top here. Okay, let's just clone this. And you can see right there, we got this double top. Now looking at the 60, see how high the RSI went up? We went up to about 96. And then what we did on the retest, now this is a valid double top because we didn't break and close above the previous high, the initial test high. If we had, then I'd be a completely different trading situation. I'd be looking for continuation to the upside. But because we held and we didn't break and close above the initial test high, there's a higher probability that we're going to roll over. So what I look for is RSI gone overbought. I'm looking for that second test. I'm looking for a valid second test so that we don't break and close, so it's a valid double top. And then as long as we put in an equal test of that high, I'm looking for some bearish divergence on the RSI. And you can see, look, what I mean by that is the RSI is pushing down now. We've got that bearish divergence, but equal tests. So price is putting in equal tests, RSI is putting in bearish divergence. So what I want to do is get involved immediately in this, right? I want to enter next bar market, and that's exactly what I did. I got involved at 96.98. Now let's show you where my targets are for this. So I'm looking at an ATR above that double top. So let's just bring on our short position indicator here. Got short at 90.98. All right, now where my stop loss was an ATR above this high. So we was up at 97.20, just above that 97.20 level. And my targets are down at a retest of this inside structure level. And I'm just above that 96.60 level at 96.61. And you can see it's only an in-out trade. Okay, it's only an in-out trade. I don't, if I'm in a trend, my profits are slightly different, but on a structure-based trade like this, a little counter move, all I'm looking to do is just get in and get out. I want to get my profit on that high probability move. I don't want to be greedy. I don't want to hold it forever. I want the profit. I want the profit, and then I want to wait for the next one. I want to get the profit, and I want to wait for the next one and get the profit. Right? That is how a professional trader is able to maintain consistent profits and not give everything back to the market. So I'll keep you updated on this. I'll do a little update to see what happens next. It may just push up, it may push down. I've got a high probability of it pushing down. I hope you can see the quality of this trade and the patience that it takes. I don't just take any other double top because they happen everywhere. If you take every one, you're going to go broke. It's all about waiting for the high quality trades, waiting for your rules to be met, having some rules to follow, and then executing when your plan says you can. So we'll see how this goes, and I'll catch you in a bit. All right, guys, just an update on this trade. You can see we actually pushed, we held for a little while, we pushed all the way down. We came with about 4 pips from my target, My target was sitting down around 4 pips lower than where price action pushed down to. Then we pushed all the way back up to break even, and then we pushed all the way back down. And this thing's been playing with us all day. But what the good news is we haven't violated that previous structure resistance level yet. And we've got some news coming out on the New Zealand dollar. Typically, when there's some news out in the Asia session, we see a bit of volatility because it's pretty dead, the Asia session. And when there's like news releases, like a rate statement of some sort or a bank rate, we see some movement. So going to keep an eye on this for the next couple of minutes and see what happens, because if we push down, we're going to get taken out of this trade, and it's going to be a nice, very, very profitable trade overall. So let's just see what happens. All right, the market's going a bit crazy there at the moment. You can see we're pushing down, and looks like we might be taken out here. So we're just going to keep our eye on this and see if market can push down and close out our order. So let's just watch this. So let's just see if we get taken.
Order filled.
There we go. Just been taken out on the order there. Very profitable trade. Hopefully you got some value from that. Hopefully you can see the process in that and the discipline that it takes to stick with the trade, because we're, as we say, we pushed all the way down, we pushed all the way back up, 4 pips away from the target. Most rookie traders would have taken the profits off. We then pushed right back up to break even, and then we rolled over. Just thought I'd wait up for that news just so I could manage that if I needed to. We're out of the trade now. Very, very nice trade. 1.6% on the account. So very, very nice. So if you've got any questions on that, leave the comments below and I'll be happy to answer any questions you've got.